Okay, let's talk about something that sounds a little crazy, right? Bitcoin and your retirement savings. It's a massive, fiery debate happening right now in finance, and honestly, the stakes could not be higher.
So, could it? Could Bitcoin actually be the key to a richer retirement? You've got some people saying it's the financial opportunity of a generation. And then you have others who think it's just a reckless gamble with your future. The real answer? It's probably somewhere in the middle. So let's dive in and really break down the argument.
All right, first things first, what even is Bitcoin? Well, you can think of it like digital money, but with one huge game-changing difference. It's decentralized. That means no government is printing it, no single bank is in control. It's basically a global network that lets people send value directly to each other. No middleman. So, the big question is, how does this brand new kind of money possibly fit into something as traditional, as, old school as retirement planning? This is where you get a real clash of worldviews. It really boils down to two completely different philosophies. It's like the tortoise and the hare. On one side, you have the tortoise, your traditional retirement plan, built on slow, steady, compounding growth and things we all know, like stocks and bonds. Regulated stuff. On the other side, you've got the hare, Bitcoin. And its whole appeal is that potential for explosive, high-speed growth and this idea of digital scarcity. The fact that there's a hard limit on how much can ever exist.
And that scarcity idea brings us to the most optimistic case for Bitcoin, which you'll often hear summed up in two powerful words: digital gold. So let's look at the argument for actually adding this to your retirement nest egg. The bull case, the argument for it, kind of goes like this. Because there will only ever be 21 million Bitcoin in existence, that built-in scarcity could, in theory, protect your savings against inflation, a lot like how people have used gold for centuries. But the real lightning in a bottle here is what investors call asymmetric upside. Now, that's just a fancy way of saying that the potential reward could be absolutely massive compared to your initial risk. That a small, calculated bet could potentially lead to life-changing gains. And look at this. This chart is a picture of that potential upside in action. If you had put just $100 into the stock market, or into gold, or into Bitcoin 10 years ago, well, you can see the difference. It's pretty staggering. Now, of course, and this is really important, past performance guarantees absolutely nothing about the future. But this incredible historic growth is the reason we're even having this conversation. This quote right here really gets to the core of the pro-Bitcoin argument. It's framing it not just as some stock you buy, but as a lifeboat, an escape hatch from a traditional financial system that its biggest supporters see as fragile, maybe even broken. But, and this is a huge but, for every incredible story of somebody getting rich, there's an incredible story of risk. We have to look at the other side of this coin. Let's talk about the peril. Volatility. This is it. This is the number one risk. It's the price of admission you pay for that potential growth we just saw. We're talking about extreme, gut-wrenching price swings. The journey with Bitcoin isn't a smooth, steady climb. Nope. It's a financial roller coaster that can drop just as fast as it climbs. And you have to be ready for that ride. And to make that real for you, just look at this number. -80%. Bitcoin has gone through several brutal bear markets where its price has crashed by over 80% from its all-time high. I mean, just imagine putting your retirement savings into something and then watching it lose 4/5 of its value. This has happened, and you have to assume it could happen again.
So the case against it, the bear case, it definitely starts with that insane volatility. But it doesn't end there. There are huge security risks. If you get hacked or if you simply lose your digital keys, your money can be gone. Just poof. Forever. With no bank to call for help. Then you've got the regulatory uncertainty, as governments around the world are still trying to figure out what to do with this thing. And finally, unlike gold or stocks, it's never been tested through a major long-term global recession. We just don't know how it would hold up.
Okay, so we've got this intense bull versus bear debate raging. So how do the experts, the strategists, suggest you even approach this? Is there some kind of middle ground between going all in and just, avoiding it completely? And that brings us to maybe the most important concept of all, allocation. See, even the people who are super bullish on Bitcoin
almost never suggest you should bet the farm on it. Not at all. Instead, they talk about taking a very small, very calculated slice of your overall portfolio. And the goal is simple. You want to get exposure to that massive potential upside while making absolutely sure that the potential downside is small and totally manageable.
So what would a responsible strategy even look like? And look, this is not financial advice, but it is a summary of the common principles you'll hear. Number 1, research deeply. Really understand what it is you're buying. 2, allocate sparingly. The golden rule is to only invest what you are truly prepared to lose. 3, secure your assets. This means you got to learn about things like cold storage to protect yourself from online hacks. And 4, prepare yourself mentally for that volatility. You have to adopt a long-term mindset. This is not a get-rich-quick scheme. So really, the most crucial point is this. For pretty much everyone exploring this idea, the conversation isn't about ditching your 401k or replacing your traditional retirement accounts. No way. It's about whether a small, calculated risk in a totally new kind of asset has a place alongside them, maybe as a way to supplement your portfolio and add a little growth potential.
And so, that brings us right back to where we started. Is Bitcoin the future of retirement, or is it a gamble that's just too far for your future? As we've seen, there are really powerful, compelling arguments on both sides of that question. The right answer for you? Well, it's going to depend on your own finances, your timeline for retirement, and maybe most importantly, your personal tolerance for risk. Hopefully, this explainer has given you a solid framework to start figuring that out for yourself.